Hi, and welcome to Edolab Markets. Today we are going to work with accumulation and distribution, using Edo A/D flow core. The classic A/D line adds up, candle by candle, where the close finished inside its own range, weighted by volume. Close near the high on heavy volume adds to the line. Close near the low on heavy volume takes away from it. The problem with the raw line is that it never stops growing, so you cannot compare one period with another. This version fixes that. On Alcoa Weekly the flow has just rolled over from the top of its range, and the histogram has flipped to the bearish side. There are two lines in the window, and both are built from that same accumulated flow. The blue line is the fast one, a 9-period average of the flow. It turns first. The yellow line is the slow one, 21 periods. It carries the direction of the flow over a longer stretch. On Cameco Weekly both are up in the high 70s and coming down together, which tells you the buying pressure is easing. Same information, two speeds. The interesting part is always the distance between them. Now the part that makes this version usable, the normalisation. Both lines are rescaled against the highest and lowest flow of the last 90 periods, so they always live between -100 and +100. +100 means the flow is at the top of its own recent range. -100 means it is at the bottom. That is what lets you compare a stock with itself 6 months ago, or with any other instrument, without the raw numbers getting in the way. On Target Weekly the whole picture went from the ceiling in 2021 to the floor in 2023, and back again. The columns are the distance between the fast line and the slow one. Above zero, the fast flow is stronger than the slow flow. That is accumulation building up. Below zero, the fast flow is weaker. That is distribution taking over. And the color has two intensities on each side, bright while the gap is still widening, faded once it starts to close. On Las Vegas Sands Weekly that shrinking tone showed up on the columns well before the lines actually crossed. When the two lines cross, the histogram crosses zero at the same candle. A cross-up says the recent flow has become stronger than the longer-term flow. A cross-down says the opposite, whatever buying there was, it is no longer keeping up. On First Solar Weekly you can see the flow crossing back and forth several times while price built a wide range. That is normal. Flow crosses are context, not entries, and on their own they will whipsaw you in a sideways market. The dotted line at zero is where both flows agree, and staying on one side of it for a long time is a message in itself. On Schlumberger Weekly the histogram spent almost 2 years below zero, with barely a green column in between. That is not a signal. It is distribution being paid out slowly, week after week, and price drifting down with it. Then the flow turned in 2026 and the columns went green and wide. Reading how long the flow stays on one side is often more useful than reading any single crossing of it. The indicator also marks divergences, and this is the reason most people use an A/D line at all. A bullish divergence is printed when price makes a lower low, but the flow does not follow it down. The label reads bull. Newmont Weekly gives you a textbook case, 3 of them across the 2023 low, one after another. Price was still making new lows down here, while the flow was already refusing to. What came next was the whole move to the highs. The divergence did not cause it, but it did tell you the selling had stopped. The mirror image is the bearish divergence, labeled bear, price makes a higher high, and the flow makes a lower one. Delta Weekly has one on the last leg up, with the red line joining the two peaks of the flow. Up on the chart, price was pushing into new highs at the same time. So the last push was made with less accumulated flow behind it than the one before. Earlier in the year the same tool worked the other way round, with a bullish divergence at the low of that correction. Now the honest part, because divergences are the most oversold idea in technical analysis. On eBay Weekly there are 4 bearish divergences across this advance. And price went from $50 to over $100 while they were printing. The reason is visible in the window. The flow was pinned near the top of its range the whole time, so every small dip looked like a divergence. A divergence is a warning that the push and the flow disagree. In a strong trend, the trend usually wins. Let's open the settings and go through them. The first block sets how the flow is smoothed, exponential or simple, with 9 and 21 periods by default. Below them sits the normalization period, 90 by default. That is the window the scale is measured against. Make it shorter and the readings become more sensitive to the recent range. Make it longer and you get a slower, wider context. The display block switches each layer on its own, the fast line, the slow line and the divergences. And this is the one worth knowing, the divergence sensitivity, with 3 profiles. Fast reacts to small pivots and prints many. Slow only compares wide, well-separated swings and prints far fewer. The colors of the 4 histogram tones and of both lines are yours as well, and balanced is the right default to start from. On Etsy Weekly the defaults hold up well, and you can see the flow turning up long before price did. This indicator does not ship with named alerts, but you can still build them on any of its outputs. In the Create Alert dialog you pick the indicator, and the second field lists everything it draws, the histogram, both lines, and the divergences themselves. So a bullish divergence, or the histogram crossing 0, can both be turned into an alert in a couple of clicks. The third field is where you choose how it fires, crossing, crossing up, or crossing down. None of that is a buy or a sell order. It only tells you that a condition has been met on the closed candle. Edo A/D Flow Core is free and open source. You will find the full script on TradingView, and everything else on our website, www.edolab.io. Structure before signals. This is Edolab Markets, and we'll see you in the next video.